Hello guys, welcome back to the channel. Hope you guys had a good trading day today. No, wasn't necessarily the easiest day to trade, but let's see what we did today, right? So to begin with, I thought we'll begin with Dow futures because I have been tracking this chart and global markets tend to take direction according to how Dow moves. And if you've been in the market for a certain amount of time, you must have realized when the market has to fall into a perpetual bearish trade, right? Like it has to fall ruthlessly. It does not really consolidate and take a lot of time, right? Because it's been ever since this consolidation has been happening within the box that I've drawn since the 10th of March. It's been 1, 2, 3, almost 7 days, right? 7 days since the market has moved anywhere. It's just been hovering around in this range. I think it's looking for some kind of stimulus, probably from the banking sector with a lot of news floating. Maybe it's looking for some news to break out for direction to take, but this gives me enough conviction because from the bottom, if you see, right, it's from 31,500 until 31,800. That's almost 1%, right? Every time the market has been going down, a 1% recovery has been seen in Dow, right? That shows the interest of bulls to keep the market up. And today, surprisingly, it's doing really well. It's almost 350 points gap up, but let's see how it turns out by the end of the day. So now jumping back to our markets, on a daily, as we have discussed earlier, this keeps giving me conviction, and this conviction is only getting stronger now about what we have been seeing the vision to be like, right? If at all this play has to play out, right? Even if the market has been hovering around the lower end of the daily channel, if it has to move up to the upper end of the daily channel, right? What it does is it makes the left shoulder here. This is the head, and it makes the right shoulder here, right? So after that, if the market has to fall, we will have a better shorting position. So I do not see the favorable risk reward for shorting the markets here because markets have not been able to close below these zones, right? What is this zone? Around 16,800. Market does not close. It happens to go all the way till there, but you see a recovery by the end of the day, or at some point of the day, you always see recovery. So on a daily, until and unless we see a significant and a proper closing on a daily candle below 16,800 levels, right? Below 16,800, 750 levels. Until we see that close on a daily, I'm not going to initiate any more fresh short trades, okay? So we are looking for long trades, and that's one of the reasons why I'm holding BTST longs in Banknifty. We will come to that when we discuss Banknifty, why I took that trade. And that's all for daily. If you look at a smaller time frame, it is a very simple setup, right? If you notice, the price has been strongly hovering between this zone from around the 13th of March, from 17,200. It keeps hovering here, right? It goes all the way up, goes all the way down, and now we are at the bottom end of the channel, and I am expecting the market, if at all, on a smaller time frame, if you have to analyze right now, right? If the market has to open, again, coming back to three cases, gap up, gap down, or flat. Now, if you open flat to gap up, a very minimal gap up of around, say, 20-30 points, that's considered almost flat. If that tends to happen, right, in Nifty on an intraday 15-minute chart, any 15-minute candle that closes above the high of today, right, that is around 17,057. Any candle that closes above 17,057 or directly opens around 17,050 and tends to move higher, then we are definitely filling this gap. So we get the first trade of around, that's almost 70 points, right? And that's exactly where the 200 EMA on a 15 is placed. So it would be an amazing place to book our targets, because if you see, the market initially also could not cross these zones, right? So around 17,120, 17,130 levels would be an ideal place if the market has to open flat or slightly gap up and tends to move and crosses today's high. Then from 17,045, 17,050, we get almost 70 points in a long trade in Nifty. That's very good for intraday, right? That's case number one, that's gap up or flat, like a small gap up or a flat opening. In case of a gap down, I will not be very convinced to even trade intraday because it will lead to a lot of volatility, right? Because this whole zone, it's very congested. You see the market falls, like if you look at this, market traps a lot of people. It falls, everyone's bearish, suddenly market goes up, right? And then market's going up, and then down. It's not very easy to trade this zone, right? So if at all the market opens gap down, I personally would not be looking to short the market. I will look for small long opportunities, and I will be looking for long trades. I'm biased. Obviously, it's not because of the position I'm holding, it's because of the view and the structure that market has been making right now, okay? And the third case, right, the most important case would be if we directly and open right above 17,130, right, around this zone. If you open around this and you see the market has been taking resistance once, twice, thrice, 4 times already, right? So this time in the flow, market will tend to propel upwards because there's a lot of calls shorted. A lot of people are still short in the market, and it will lead to a short covering move. So in the case that market opens gap up above today's high, I will tend to be a bit cautious around 17,200 levels because it has a lot of open interest also. But in any case, market opens above 17,130 and closes a 15-minute candle above 17,200 or directly opens above 17,200, right? Highly unlikely, but what if it does? In either of these cases, we are getting good targets. The first target being 17,330 and the next target being 17,430. This will be a second 17,450. So the first target above 17,200 will be 17,330 and the next target is 17,450, above which there's a gap pending and we could eventually trade that, but I don't think that could happen tomorrow because that's almost 450 points from here. So all three cases discussed, very slightly positive to flat. We wait for 17,050 levels to be taken out. That's today's high. Any 15-minute candle closing above this, we take the first target as the 200 EMA on a 15-minute, which is 17,129. In case of a gap down, I will not be trading. I will just wait it out. I will look for market to take direction. And if we happen to open above 17,129 and sustain above it on a 15-minute candle and hover around this zone, then any 15-minute candle closing over 17,200, I'm holding longs until 17,330 and then eventually 17,450, right? So that's a trade plan for Nifty. Now coming to Banknifty on a daily. If you look at Banknifty on a daily, ever since the 14th of March, that's 1, 2, 3, 4, 5. In 5 days, the price has narrowly even moved anywhere. There's a lot of volatility, right? There are fluctuations of 200-300 points in one candle. We've seen all of that. We've been getting stopped out. But the market net day by day hasn't moved a lot, right? So it has been consolidating. You know, consolidation happens for two reasons mainly. One reason being either accumulation or distribution, right? But at the bottom of the channel, or if you look at daily, right? Over here, if you tend to zoom out, you will notice that there was this pending gap, right? And the markets eventually filled that up. This gap has been filled, right? So this is around the bottom of the structure, and the markets consolidating here, and global markets recovering, dollar crashing right now. My bias is bullish, and I do expect a recovery after such a strong fall. And if the markets had to actually come down and test this COVID trend line, it would have broken down sooner. So my bias stays bullish, but now on a smaller time frame, what's giving me the conviction to hold my longs for tomorrow? I am holding BTST Banknifty. What's giving me conviction is, if you can notice this pattern, right? Do comment in the comment box and let me know if you already noticed this. It's good if we can interact like that and discuss charts through the comment section. If you notice this, right? This pattern. Do let me know in the comment section what this pattern is, right? If at all you already identified it. But for people who don't know, who are beginners and who might be watching this is an inverted head and shoulder pattern. Now, a lot of people tend to think that, chart patterns are very textbook like. They have to look aesthetically pleasing and just how they have been depicted in textbooks. But you've got to understand what price does on a chart pattern, right? What you have to understand is that the first time price fell down, there was sudden buying and the prices propelled up, right? The next time prices fell down, there was sudden buying and then prices propelled up. The third time prices came down, they are now on their way to propel back up and eventually break out, right? So our trade plan for tomorrow in Banknifty on a 15-minute time frame is, I'm not looking for short trades at all. I am not interested in any short side trades. I'm only going to look for long opportunities. So now 3 cases in Banknifty as well on a 15-minute time frame. If we happen to open flat or, slightly positive, slightly negative or flat, right? Anywhere between 39,400 and 39,000, this is clearly and strictly a no trading zone. Do remember this, do mark it in your own charts because you don't want to play the volatility if you're an option buyer, right? If you're selling, then yes, I understand you could sell options and you could, eat the premium. But if you're an option buyer, this is strictly a no trading zone between 39,000 and 39,400, right? Now the 3 ideal cases. Case number 1, if you open flat, slightly positive, slightly negative to flat between 39,000 and 39,400, for an option buyer, I would not recommend any trade. Stay out of the market, let market take direction. In the case of a strong gap down, we are not going to do anything. We are just going to wait it out. We are going to see whether the buyers are interested, whether the sellers push the market further down. The ideal case right now would be if the markets open slightly flat and any 15-minute candle breaks today's high, right? Today's high is this zone around 39,450. If this zone is taken out, right, you get your first easy target as the 200 EMA on a 15, that's 39,620. That's almost 200 points, which is a lot for intraday, right? So that's your first target. If the markets open gap up anywhere above the 15-minute 200 EMA on a 15, above 39,600, and they happen to sustain and they hover around this 39,700 zones, With your stop loss below the 200 EMA on a 15-minute time frame, you can definitely go long, because this long trade will give you big profits, right? It can give you good targets, because ideally, technically, according to an inverted head and shoulder pattern, if at all this breaks out, right, what you can ideally set as target over here is, let me show you, right, from this low, right, from this low until here, this could be your target on the upside, which is quite a big target, right? It roughly comes to around the 4370 levels, which we have been talking about to book our profits. So any 15-minute candle closing above 39,700 is a direct long entry. With your stop loss below the 15-minute 200 EMA, you can hold the long trade. If the markets look bullish globally and also in our markets, if you look bullish, you could probably even carry it forward for BTST. In any case, that has to happen. I will try my best to update you with a YouTube video, a short video, or on my Instagram. And we could see what to do with BTST. But for now, this is the trade plan, right? Between 39,000, 39,400, no trading zone. If the market opens gap down, slides down further, we are not interested as an option buyer. We are not taking that trade. If the markets open flat, break 39,400 levels, our first target is 39,600. And any 15-minute candle closing above 39,700, we are going to hold our long trades until 40,200, 40,300 levels, right? We are going to get good targets then. So this is my analysis for Nifty and Banknifty for tomorrow. And I was speaking to my mentor today, and he told me, he suggested me something which I really like the idea about. He suggested me that if at all, I am discussing these zones, it will help the audience if I can put these levels in the description box. So from this video onwards, I'm going to be putting the levels that we have discussed on a 15-minute time frame, a breakout or a breakdown of which could lead to a potentially good trade. I'm going to mark these levels, I mentioned these levels in the description. You could note it down, and I hope that helps you with your trading tomorrow. And also, I've uploaded a gap trading video today, a Banknifty gap trading strategy. It has been very profitable. It's given me almost a 70% win ratio. So I will be delighted if you see it. And if it really helps in your trading, kindly do comment and let me know that it's helped you. This is the only kind of validation I'm looking for. If at all I can help you out in your trading, this gives me the most delight, right? And I really like seeing you guys here because it's fun. I love trading and I love helping out people who are new in the markets, right? So having said that, I hope you guys have a great day tomorrow. And in the description box, you can find my Instagram. Kindly follow me there. I'm planning to run a 100-day trading challenge for myself so that I can show you, the new audience, what a trader who knows what he's doing is capable of, right? You can consistently be profitable over longer frames of time. And other than that, kindly like, share, subscribe, spread with your friends, people who could need the strategy or market analysis. And I hope this helps you. All the very best. Protect your capital, be safe, and enjoy day trading, right? Have fun. I'll see you guys tomorrow.